Good morning, my name is Rick Bell. I'm a real estate agent with the Lon Pennell Realtors in Los Altos. And this morning I'm here with Dennis Young of Young, Craig & Company, which is a CPA firm in Mountain View. Good morning, Dennis.
Good morning.
Happy to have you here.
Glad
Maybe
to
we
be here.
could start just by you telling our audience a little bit about your company.
Young, Craig & Company is a 40-year-old CPA firm. Janet Craig and I got together in 1977, and the firm now has 26 people in it. We do a lot of real estate and nonprofit organizations and high net worth individuals, and people that are involved have their own business so that we can tax plan for them.
Excellent. Okay. Well, I've asked Dennis to join me here today to really speak on two topics that come up quite often as a real estate agent. One is the guidelines and process for transferring one's property tax basis on their personal residence to another property. And the second would be if one wants to convert the proceeds of the sale from one's personal residence into a exchange property for presumably to generate income going forward. So why don't we start with the process of transferring your property tax basis from one property to another. Maybe you could explain the general guidelines for that.
Well, 40 years ago, in 1978, we passed Prop 13, which has evolved into some other things going on. One of the rules is Proposition 60, which says if you sell your primary residence, you're over one of you or both of you are over the age of 55, you can transfer your property tax basis to your replacement property. The rule besides 55 age is you have to buy a property that costs less than the original property you're selling. Mm-hmm. If you do it before you do the sale, or you can go up 5% in year one or 10% in year two, which can be a significant tax savings.
Mm-hmm. So, for example, if I understand you correctly, if somebody sold their property for $2 million and wanted to buy, say, a beach house for $3 million, there's not a mechanism for doing an adjusted basis upward.
That's correct. It's literally an all or nothing.
Mm-hmm. Okay. And within the state of California, how many counties are there that honor this, and which ones locally in particular?
Well, Prop 60 is intra-county. You can always do it within the same county. Then there's Prop 90 that says you can do it between counties.
Okay.
But right now there are only 10 counties in California that allow you to do that. For example, had a recent question about buying a property in San Francisco. San Francisco's not a qualifying county. Mm-hmm. In Northern California, it's Santa Clara, San Mateo, Alameda, and El Dorado up north.
Okay, interesting. And the process for executing this, is it complicated? Do you need somebody that specializes in this, or your firm? What?
It's not complicated, but it can be daunting. You have to go down to the county and you fill out a form that says, okay, I've done this and I want to transfer my property tax basis under Prop 60 or between counties, Prop 90, and it's done. The property has to qualify for primary residence exclusion, and then it's done. But sometimes people aren't sure about going down to the county,
right, and
we do help out with that.
So for your clients, this is something you can assist with?
Correct.
Okay, excellent. So then moving on to if somebody wants to move the proceeds of the sale of their personal residence into an income producing property, presumably through an exchange, what are the mechanisms for that?
Well, let me back up. There are basically three ways when you get rid of your primary residence.
Yeah.
You can do an outright sale, in which case you then compute your gain and pay your tax and move on.
Yes.
Secondly, you can do an installment sale where you're a banker and you're carrying back part of the proceeds and you collect interest and principal and pay taxes. You collect the principal on that note. The third way is you convert your property to a rental property. Mm-hmm. And the rules on that are one is intent, and two, that it's a rental property for, we like to say, at least 2 years. That's been readily accepted by the tax courts and the IRS. At least 2 tax periods. If you do the transaction in 2018, it's rental for 2019. You don't do the sale until 2020.
In the abstract, it could be well short of 2 years, right? If it's 2 tax returns and the sale is done in December, it could end up on 2 tax returns.
It could end up being 13 or 14 months.
Right.
But if you're short of that 2 years, you need to have a reason. We call it papering the file. I hate being a landlord. I want to get out of this. I don't,
Yeah.
Change in circumstances, divorce, death, whatever. Then that you can paper the file and you could shorten the period.
Okay.
But then you do the sale of your rental property. You've now converted your residence into a rental property in less than 3 years from the time you started renting it. The reason I say less than 3 years is you will still qualify as it being your primary residence 2 out of the 5 years, which is the rule for getting the exclusion of $250,000 single, $500,000 married couple on a sale of a primary residence.
Okay.
So at the end of this, let's use 2 years. You now sell the property, 2.5 years. You could actually do an exchange with a qualified intermediary for another property and put a married couple $500,000 cash in their pocket tax-free. They then do the exchange into raw land, a apartment building, a strip mall, a commercial property, real estate for real estate. It must be a tenant in common interest. It can't be a partnership interest or something like that. It has to be a tenant. It has to be an ownership interest.
Can it be a land lease, for example? Could somebody buy a McDonald's or a Jack in the Box and have a land lease?
Absolutely. That's they're buying the land, so that qualifies for the exchange, and then they lease it for 30 years to McDonald's. Had a number of clients do that, and then McDonald's just wires money into their bank account every month.
And that's a very straightforward, easy to manage transaction. I know a lot of people choose to go into these land leases because there's virtually no oversight and maintenance if you've got a good tenant.
That's correct.
Yeah.
Yes.
And do you, in a given year, do you see many of your clients doing these conversions from a primary residence to an investment property?
As our clients have gotten older and they're looking at either downsizing or selling their primary residence, at least once a month, if not more often, it comes up in the discussion of, okay, I want to sell my house. What are my options? What's the result?
Yeah, excellent. Well, listen, Dennis, I appreciate you joining me here today. I think both of these topics will be very interesting to a lot of people because I'm asked questions about both of them very often, and I think you've answered them very well, and I appreciate you coming, and perhaps we could get together and do this again on another topic.
Glad to be here, happy to answer the questions, and if anybody has more questions, they can contact us and happy to answer them.
You know, one thing I think it's worth mentioning is that legal and financial matters are complex. They're subject to interpretation and can change at any given time, and anybody considering executing a strategy along these lines really needs to consult with their own representative and not just rely on our conversation here today. So there's that.
Thank you.
I appreciate it.
Glad to be
Come in.
here.
We'll see you again.
All
Thank
right.
you. Bye-bye.